Hejsan och välkommen till Möt East Capital Group. Jag heter Per Elkar och är vd för East Capital Group. Jag hoppas ni har haft en bra sommar. Som ni vet så bygger mycket av vår placeringsfilosofi på att vi är ute hos lokalbefolkningen. Vi träffar företag i dess naturliga strategi. Vi reser kolossalt mycket. Vi har personal på ett antal stora områden. Det kan vara Kina, det kan vara Indien. Det kan vara i Dubai för att just kunna addera den lokala kunskapen, vad den betyder. Idag har jag med mig två av mina kollegor, Dilara och Ritish. Dilara är ansvarig för vår Balkan-strategi, där vi idag kommer att prata om Turkiet, Grekland och Rumänien. Och Ritish är ny till oss. Han började för någon månad sedan i Mumbai, där han bor och har haft en lång erfaren karriär som portföljförvaltare. Både Dilara och Ritish pratar engelska, så att jag tänkte faktiskt svänga över till engelska från och med nu. So I'd like to start basically by asking Dilara, what is the situation? Let's talk about Turkey, Greece, maybe Romania.
Hi, thanks for having me. Thanks for the opportunity to share stories from these exciting markets, as you were saying. Actually, I think I'd like to start talking about Romania. I think it's one of those countries that doesn't often get the spotlight, but in some ways it does deserve the spotlight. I think one misconception that I want to bring up about Romania is that it's a low-income country. But like often is the case, I think people think that something that was true 20 years ago is still true. However, in Romania's case, they've come a long way to sort of converge to European standards, and now actually they're a high-income country by World Bank standards, and they've escaped the so-called middle income trap. I think we take for granted sometimes that so many European countries were actually able to transform from middle income countries to high income countries. But actually, across the globe, that's a pretty rare phenomenon. Besides the Asian tigers, so like Singapore, Hong Kong, South Korea, Taiwan, it's only really the European countries that have been able to escape this middle income trap. And that's why I think the Balkans area is so exciting. It's because there's also the angle that European Union is this convergence machine. So they're able to really prescribe and incentivize the right policies that will help, either member states or candidate countries, like in Turkey's case, improve themselves. If we look at Romania, this kind of income creation has really led to superb stock returns. If you dial back the time to 5 years ago, GDP per capita in Romania was just under $13,000, and now it's almost $20,000. And what this has meant for the stock market is that it's been one of the best stock markets globally. So it's actually returned 140% in dollars over the past 5 years. That's more than the NASDAQ, that's more than Taiwan. I think that also brings up this other misconception about investing, that only if you invest in the most developed economies or the strongest economies, you'll get good stock returns. But at East Capital, you learn very quickly that that's not actually the case. And I think that's the nice part about working at East Capital. We really look for investments all across the globe. Our Balkans fund actually won a prestigious award recently for best performance in Europe over 5 years. And I think if you asked a lot of people 5 years ago, they wouldn't have been able to guess that the Balkans region would deliver such great returns. And another example of that, like you brought up, is Turkey. So that's also this transforming market, I'll say. It's been a difficult market, many ups and downs, but over 5 years, it's also delivered great returns. So the Turkish market is up more than 100% in dollars over 5 years. I think we've stayed invested. We've stayed on the ground, always traveling to Turkey, meeting with companies, making sure we're update with the latest development. And for us, that's really paid off. But a lot of foreigners, investors, They don't really understand what's going on. They think it's not really worth the effort. So they just don't invest and they've missed out on these great returns.
Dilara, if I may interrupt there, I mean, you being Turkish, you being there talking to friends and family continuously and also traveling, what would you say is the biggest if not understanding, misconception of what's going on in Turkey from the foreigner side?
I think, I don't know if it's a misconception, but I think they just struggle to really understand what's going on. So we see these big changes in Turkey. 1 month inflation is 80%. The next month it's 50%. It's not really obvious what that means. And if you look at the policy rate, it was as low as 8.5% a year ago, and now it's 50%. So it's a very dynamic situation, and I think that sort of confuses people. But in my opinion, I think there's a strong chance that actually Turkey comes out stronger on the other side. There are great corporates there. What's really missing is this kind of stable investment environment. So that means stable lira, low inflation, moderately high interest rate. Um, and that's all you need really to have foreign investors
And I think
come
this
back.
I think this highlights very much the key and the importance of us being very close to the market, being there to sort of pick up on these sometimes subtle but very important indicators. Let's go to Greece. I mean, here in Sweden, we knew that Greece 10 years ago was a big problem, and it recovered widely. Give me your feeling of what the Greek market and the biggest impression from there.
Yeah, I would say Greece is one of my favorite markets. And every time we visit Greece, or at least in the last few years, companies are feeling very positive and hopeful. And now, as you were saying, people have sort of heard about the economic rebound. We think the economy is going to keep growing there. And I think the interesting part is that it keeps growing despite this austerity program. So the government is continuing to deleverage. They want to have a primary budget surplus of 2% of GDP this year, which essentially just means the government is collecting more revenues, so more taxes, than it spends. And yet, despite this austerity program, the economy continues to grow. And it's mainly growing through private investments, which is a good indicator to suggest that this kind of growth will keep on going, and maybe it even leads to productivity growth. And we see Greece outgrowing the EU. But all in all, it's a very different macroeconomic environment than it was in the past. Debt to GDP was above 200%. Now it will probably end the year around 150%. And then by 2027, it will be lower than 140%, which is still high, but it would likely be lower than what Italy's public debt to GDP will be at that year.
Dilara, for you as being traveling and knowing very well what's going on, but for us who don't know the Greek market as intimately as you do, what's your way of playing this strong recovery as far as sectors or stocks? Could you just exemplify that?
Yeah, sure. So, like in Turkey, Greece has really great corporates. We invest in this smaller bank that actually didn't get impacted by the problems of the Greek sovereign debt crisis. So they're newer, they weren't really around at that time, and they're one of the most profitable banks in Europe. Actually, all the Greek banks now are profitable, and the big four Greek banks are profitable like European banks. And we even got dividends from Greek banks for the first time. So we got the first dividends this year, and that was the first time since 2028. And another theme we like to explore is this energy transition theme. And there are great companies in Greece that are either decarbonizing, industrial products like cement or steel, or just investing in renewable energy sources.
Thanks very much, Dilara, for very interesting observations when it comes to some of the Balkan states. New for the next topic, Ritish, our new colleague based in Mumbai, India, is joining us here in Stockholm. And personally, and I think for everybody, it's extremely impressive and very, very encouraging to see what's going on in India. What has been going on in India? A progressive economy moving on. I know we had an election recently, and there are big, big plans for growing the huge Indian economy into something very, very interesting and developed. With those words, I'd just like you, Ritish, to feel welcome, and if you could elaborate a little bit more on what's going on and basically what that means for being an investor in the Indian economy.
Sure. Well, thank you very much. And it's great to be a part of EC's team based out of Mumbai. So let me just give you a quick snapshot on what's been happening in India, especially with the recent elections that the global media has been speaking about quite a bit. Just to give you a figure and the scale of the election, 1 billion people were eligible to vote in this election, and out of that, almost 700 million people voted. Right. So it just tells you the scale at which this democracy operates. Modi's government has won another term for 5 years after being in power for 10 years. And the reform process is going to continue. He is a very business friendly individual. It believes and has been very vocal about saying that there's going to be less government and more governance. And he wants private sector participation to increase manifold from here. And that, if you see his track record over the last 10 years of being the leader, that's all the reforms that he has put in place. And something to highlight, his government has gone ahead and put a very aggressive GDP target for the next 5 years by 2030. He wants to be a $7.3 trillion economy. Just to give you a figure, we are currently a 3.9 trillion economy. And by 2047, he's made a very huge claim of achieving a developed nation status for India and being a 30 trillion economy. Now, if we just were to work backwards, this translates into roughly a 7.5 to 8% CAGR growth. Now, one would try and work backwards to understand whether does India have the right raw material or the ingredients to meet these large targets. The way I see it is I break it up into two parts. One are the structural factors and the other are the cyclical factors. Now, in the structural factors, some of these are widely known globally. Number one being, as I said earlier, the continuity of the government and a reform focused government. Number two is the demographic dividend that the country has, right? So the average age of the Indian population today is 29 years, and the middle class, which has an average income of around $4,000, is expected to increase by 500 million over the next 5 years or so, as per Bain. Now, just to put this in context, think about the wealth effect that this has, as well as the consumption effect this has on a country this big. Now, as I said earlier, both these two factors are widely known and widely spoken about in global media. But I think one factor that doesn't get enough justice, and that's, I think, the underlying core factor that's propelling this country forward, is this humongous productivity dynamic that's changing in the country. Now, I can give you some examples on the social side based on some of the key reforms that have taken place over the last couple of years, just to highlight that. Number one, first and foremost, we've had a massive digital revolution take place in the country over the last 10 years. Just to give you a snapshot in that, almost 1.3 billion people, which is almost our entire population, was issued a unified identity number. And we couple that with 900 million smartphone users in the country. And when you couple these two together, the government gave out 500 million no frills bank accounts to the poor people in India. Now, what did this do? It formalized the entire economy. People who were saving money under their bed sheets are now under their mattresses are now saving money in the banking network. So they're earning interest on their savings. It also helped the bank provide subsidies directly to the people, avoiding all the middlemen. So it prevented leakages due to corruption in the system. Banks and financial institutions were able to are able to give finance and credit to this unbanked population. They're able to see the credit history that the individual has, the amount of savings, and his ability to repay. Now, this is a huge dynamic that's playing out, which I think gets underappreciated. Another social factor which translates into economic growth is the fact that almost 100 million rural women were given LPG gas connections in their households. Until now, historically, these women has been using manure cakes to cook, which has been extremely unhealthy due to the fumes. Now that they have LPG, not only does their health improve, but the time taken to cook goes down for like 4 hours to just 45 minutes per day. Now, how does this change? The same woman, not only her health and productivity has improved, but she gets additional time to go out and help the household in the farm, basically. So again, you're increasing the share of the wallet because you have two people now working in the farm, so a higher yield and more productivity. And lastly, one more dynamic that I wanted to bring out is that Modi revamped the midday meal program. Now, the midday meal program gives out 150 million children on a daily basis a meal. The only requirement that he has is the parents send their children to a school, and the meals are provided in a school with a healthy calorie diet of around 450 calories. Now, how does this change? On a typical household of four, if you have two children and this households barely eat two meals a day, now one meal is taken care for both the children. This is again, add that to a healthy meal. Not only does this address literacy rates, but this addresses the increasing wallet share of the country. So just giving you these couple of examples of how the social changes are translating into an economic change and how the wheels of the country are starting to move.
Ritish, if I may interrupt here, and it's hard not to be impressed and almost overwhelmed by the numbers. I mean, the huge number of people, huge number of money and so forth. Could you just exemplify, and I've heard you talk about this before, exemplify with one company, for instance, that is a huge beneficiary of both the economic progress, but also environmental progress?
Sure, sure. So, yeah, these are, as I said, when a country starts turning so much, there are a lot of themes that come up, right? A lot of sectors start seeing benefit. And when you have such a reform focused government, they definitely want to meet global standards. Now, one standard which the Modi government has been very focused on is the environmental standards. We have committed to a net zero target, and we want to make sure that environmental friendly industries are given a lot of subsidies, and a lot of regulations have been put in place to enhance the growth of this industry. To give you an example, one of the companies which is also our portfolio company is Ganesha Ecosphere. This company basically recycles poly PET bottles. Now, just to give you a snapshot on how this PET bottle recycling compares globally, in the US today, PET bottles, around 45 to 50% of them are recycled. In the EU today, 65 to 70% of PET bottles are recycled. In India, the number is just barely 10 to 12%. Now, PET recycling is not a new technology. It's been around, but just the implementation was not there because the regulatory incentive was not there for a country like India to do it. What has the government gone ahead and done? Starting April 2025, they have mandated that every food grade PET bottle needs to have a minimum content of 30%. This figure goes up to almost 60% within a span of 4 years. And Ganesha Ecosphere is one of the first companies in India and the largest PET recycler in India that has perfected this technology and has an operating plant that's going to take full advantage of this regulation.
Thanks, British. And I think we need to sort of sum up. But I think that the concept, the holistic view of the Indian market, as I said, for me personally, I think for most of us, it's hard not to appreciate the forces, the dynamic forces, economic, political, social, and environmental forces that's going on. And with Ritish placed in Mumbai, we are extremely well placed to learn and to pick up all these signals from the various parts of the economy. So thank you very much, Ritish.
My pleasure. Thank you.
Därmed så avslutar vi dagens presentation av Möt East Capital Group. Tack så hemskt mycket för att ha deltagit, att vara nära marknaden, att fånga upp signaler, trender i ekonomin och känna av det är en av våra hörnpelare som jag har sagt tidigare. Och jag tycker dagens presentationer, dagens redogörelse både från Dilara och från Ritish visar att det gör vi. Tack ska ni ha.
Historisk avkastning är ingen garanti för framtida avkastning. De pengar som placeras i fonderna kan både öka och minska i värde och det är inte säkert att du får tillbaka hela det insatta kapitalet.